Nikkei, that is up around 120 odd points. Hang Seng also seeing good gains, but Shanghai is something that is in the red right now.
What we are given to understand is that the global and Indian OEMs should set up a subsidiary in India exclusively for sourcing.
For a day trader, I think just keep the US bond yield and dollar index chart on your screen.
Broader story has to be that we're going to continue to see more domestic demand.
0.25% off on the Nifty, so 14,980, 15,000 has been given way, and Sensex is down about 172, a third of a percent lower.
Most of the factors which were supporting equities this long has been turning around.
The Nifty day is low, the morning low at least as of now. And if you look at the Bank Nifty, then the cuts there are even deeper. Banks are really leading the losses with a 2.5% drop on the Nifty. The draft talks about the fact that companies who have got FDI will come under the FDI policy, and if there are any discrepancies between the two policies, the FDI policy will prevail.
Primary articles number, which is plus 1.8. Now, primary articles includes food as well as minerals.
Monday afternoon, the market is sulking, and how we're down almost 250 points.
Okay, curious decline for the market. Curious, I say, because the bond yield, the dollar index, they've not incrementally gone against the market. The US bond yield has been where it has been for last 2-3 days. The dollar index as well is not really way above 92. Something which we had digested on Friday. So 91.77 on the dollar index, the bond yield at 1.616. And the other reason I say curious is because while Asia, couple of markets are down, it's not out at all. For our market, it's a bit of a slam dunk, especially on the Bank Nifty, which is down about 2.3%. I don't know if it's because of the inflation concerns or whatever, but today it's been, in that sense, a bit of a curious day with the kind of decline that we have seen. Let's see what the last hour brings for us. Surabhi is joining me as always in closing bell. Surabhi, hi, good afternoon.
Good afternoon, Anuj. Yeah, absolutely, because I was looking out for cues from Europe to see if there's any bigger slide there, but that's not the case. Like Anuj said, Asia was all right mixed to actually even slightly positive on some of the markets. Same with Europe. You're seeing actually a rally of about 0.3, 0.4% to a little more, depending on which index you're looking at. So Anuj, then how should one read the weakness here at home? Because I remember the last time that Friday tantrum that happened when the bond yield first went to 1.61, right? I think 14,500 give or take a few points here and there. That's where we sort of bottomed out from. So how do you sort of look at today's decline? Because it's a little secular in nature as far as India goes.
And I think that's why it's a bit curious. Look, at the end of the day, I don't think European comparisons make sense, because the market's going through a bit of a phase of developed market outperformance versus emerging market. I think I'll strictly keep an eye on the emerging markets, and if we are underperforming compared to that peer set, and that's what we have done today, Surabhi. Now, there's been a bit of a recovery from the lower levels. Now, let's see if that holds or not. I think banks really are the problem, and I don't know if I think the trouble started on Friday when you had that massive gap up because of the SGX Nifty and the previous day's handover, and the fact that it was used so aggressively to sell into. I think that gave confidence to the bears that perhaps after a long time that they're sensing something in this market. So the lack of cash market buying is something which has been plaguing this market. The market's getting oversold though in the near term, Surabhi. The put call ratio has fallen below 1, and I think if you see the India VIX as well. I think that a couple of indicators that the markets, perhaps fallen, perhaps just in the near term, gotten a bit oversold. Also, the last low, as you said, was 14,500 thereabout. So let's see if this time we get away with that. 14,829 is what we have on the Nifty. Purely in terms of moving averages, 14,680 is the 50-day moving average. I think today's low is 14,745. So we're there, but the price action, and especially in the FI favorite names, does suggest a bit of a caution.
Yeah, not too much of counter. On the other side today, barring a few tech stocks here and there and maybe some metal names, is not too much on the other side of the screen, on the green side. But we'll analyze these trends as we go along with our experts. So let's tell you what's lined up on closing bell. For now, it's of course right across the screen. The market has been in sell-off mode right from the morning, and banks are leading those losses from the front, underperforming the key indices. Mid-cap's not spared either, with a cut of about 1% on the mid-cap index. Now, it's all about the market this Monday afternoon. Therefore, we will get chatting with Adrian Moat, who's tracked emerging markets for so long, and ask him how India looks, considering all the global bond yield concerns out there. So that conversation coming up. Rahul Sharma of JM Financial joins in to talk about the technicals and whether you should be buying this dip. So lots of opinion coming along the way on the show.
Okay, but first up, the last hour calls. Mitesh Thakkar is joining us for that. Mitesh, good afternoon. Your thoughts on the fall that we have seen, though off the lowest point right now. But how would you trade the index now, and what would be your stock calls?
Anuj, I was looking at very similar levels. 14,700 is an area where a couple of averages, give and take 20-30 points, couple of averages converge on the daily and the weekly chart. So that remains an important level. I think, the fall today has kind of, shook the indicators on the negative side. So my sense that if 14,700 breaks, then I think we are looking at 14,400 kind of a range to be tested soon. And beyond that, I think the pre-budget low of 13,600, 650 could be visited. So this structure has become slightly negative, but let's see whether we actually break 14,700 or we just chop around in this range and then manage to come out of the negative indicator situation. So as of now, not taking a call there, but trading on stock specific basis, I have a sell on Maruti. Keep a stop at about 70.60 here. Look for targets of 69.40, and HCL Tech is a buy call with a stop at 978 for targets of 1,015.
Okay, those are the calls that Mitesh is going with. Well, I think we do have Deepak Shenoy of Capital Mind now with us. Okay, Deepak, good afternoon. Just your thoughts on today's overall decline and the fact that banks are the ones that are leading it on the front. What do you make of things?
Surabhi, I think with the dichotomy of, banks going up like crazy in the last 1 month is kind of getting sorted out by the fact that bond yields have been rising all over the world, not just India, but India also today. I think we're seeing an increase in bond yields other than the benchmark 10-year, which I think is protected because RBI has controlled the supply of it quite substantially. We're seeing a decline in bond yields across the board, which will obviously hit bank profits from a treasury perspective as March quarter ends. The second important thing over here is to look at the rupee. The rupee is actually appreciated by to 72 rupees 50 paisa. So it doesn't appear that a lot of foreign investor selling is happening at the moment, at least looking at the rupee. You're getting mixed signals from it. But there's another big factor that's happened from the beginning of March, which was the reduction in overall relative smaller reduction in volumes because of the increase of margins in the NSE. So that might also contribute to exaggerating certain moves because of relative lack of volume. That will take a couple of months. I think that will, market will adjust to it. So I don't see a serious problem over here. One thing to note is when the Supreme Court order comes, which has currently blocked all banks from reporting NPAs after August of last year, then we expect a surge in NPA announcements at least. And, that may be a fear that will bring banks down. So leaving that aside, I think this is just a normal correction in the market.
Okay, normal correction in the market. Deepak, good afternoon. I wanted your thoughts on Vedanta. The entire metals pack is buzzing today, but there's been a bit of a buying once again in that stock, Vedanta. Any thoughts here?
No, we actually don't have it. We've, I guess, there was a buyback offer. A lot of things that were happening in the stock last year, and since then we've not participated in it. Though the metals pack has, like you said, rallied quite substantially. I don't have any fundamental views on the stock. Still worried about what is going to happen in terms of the promoter taking it private, or is there something else on the mind? Cyclicals are going to play out beautifully, or have been playing out beautifully. I think we'll have to be a little bit careful for the rest of the year from a commodities perspective, but right now is a good time. So it's a very good trading stock. I'm not buying it fundamentally.
Okay, that's Vedanta. Actually, quite a few metal stocks or commodity-related stocks are doing well. That would include several PSUs. The PSU play is definitely still on in the market. Look at MMTC right now. It's shooting through the roof. Or what else can we spot for you? SAIL, same story over there. Something like an NMDC, NALCO. So within metals and commodities, the PSU stocks, they're doing very well in an otherwise weak market. Deepak, what thoughts on the great PSU rally? Because, it's continuing. Now, where do you have conviction, if at all, beyond just a trading play?
To be fair, we've been long BPCL for a long time. So we've bet on the fact that the government would eventually privatize BPCL. It did talk about it. It's still going on. I think they're going to announce a dividend perhaps sometime this week. I think there's a meeting that they will talk about. They've got about 15,000 crores. So net of tax, they may be about 11,000 crores as distributable, which is roughly 10% of market cap. A little bit more than that. So if they choose to distribute a dividend, that would be a big thing. But also, I think a lot of PSU stocks are going up on the anticipation that things will be smooth. But they won't be. We're seeing a bank strike happening right now. We're going to see more protests. So a lot of such activities will take 2 or 3 years before they come into life. BPCL is perhaps further ahead in the game, and we haven't seen the end of the protests over there, but it'll still take another 6 months before we actually finish that process. Same with Shipping Corp. I think those are the candidates you might want to look at, because if they eventually get privatized, there's a lot of value in there that the private owner can realize, which the government owner, as an owner, somehow does not want to realize. So I would place my bet there, but not necessarily on some of the other PSUs who are just PSUs. Right now, everybody is bidding for dividend, and it's a fun time because we're going to see a lot of dividends in the next 2 weeks.
Okay, well, that's some news. The FM has introduced the bill. Remember, it was presented in the budget, of course, to increase the FDI limit in insurance companies to 74%. Insurance has been a sector which has been doing well. In fact, we spoke about SBI Life this morning. Let's just pull out the chart of SBI Life. Now, Deepak, of course, there was this block which many people believe has removed the last remaining selling or the big sell quantum on SBI Life. But any thoughts on the insurance stocks, and is there any stock that you would want to buy? SBI Life, HDFC, ICICI Pru, Max?
So at this point, I think most exciting would be in the order would be HDFC Life and SBI. ICICI has this ULIP problem. With the budget this year, any person who invests more than 2.5 lakh rupees in premium in a new ULIP policy will not be able to claim the proceeds of it eventually as tax-free. All insurance policies, otherwise the proceeds are tax-free. So specifically for unit-linked insurance policies, anything about 250,000 rupees paid will be counted as capital gain. So they'll have to pay that 10% tax on equity and so on. This introduces, taxation element which was otherwise not there in insurance policies. And ICICI has the largest concentration of ULIPs among its products being sold, at least in the past. The other insurers are relatively more well distributed, so they get a little bit more of a benefit. Plus, going forward, I think insurance companies, the penetration is slowly starting to increase. So we're seeing a lot more activity there and a lot less in comparison with mutual funds, perhaps, where the distribution of products itself has moved slowly to insurance rather than mutual funds, because the insurance provides 20, 25, 30% commissions, whereas mutual funds are probably sub 1% now. So there is large scope for these industries, but I'd go for HDFC and SBI because relatively less ULIP concentration.
Okay, got that. Well, on that note, let's take our first break on Closing Bell. We'll come back on the other side and get you some more stock-specific analysis, along with, of course, technicals. Rahul Sharma of JM Financial Services will join in for just that. And then in a bit from now, we take it global. This whole worry around rising yields, especially the US 10-year. What does it mean for the Indian market? Adrian Moat joins in.